Inflation data this morning, and it did come in cooler than expected. That has sparked a bit of a rally in the equity market, as you see. Not too much, but a bit. Let's get to our Steve Leisman. He's got a closer look at the underlying numbers of PPI. Steve.
Hey, David. Yeah, finally some good news on inflation. The PPI, the producer price index, coming in better than expected, raising some hopes that the worst may be avoided in tomorrow's consumer price index report, which is the more important of the two. Headline coming in 0.2 versus 0.4 last month, and an expectation or an estimate of 0.4. The core flat 0.0. Goose egg versus 0.2. Take out food, energy, and trade. It actually fell 0.1%, but the headline still showing some in the pipeline, 3.3 versus 3.5. Looking at the details, food declining after massive increases last month. Some of them related to the avian flu. Other issues were out there, but they were down this month. Energy, though, popping higher. Trade down 0.1%. That's the measure of margins out there among wholesalers and retailers. One concern is the domestic air travel prices rising 6.8%. on the month. Some of that could carry over into the CPI. But good news there, services, another goose egg. On commentary nationwide, senior economist Ben Ayers writes, this tempers the higher end of expectations for tomorrow's CPI report and clears the way for softer inflation readings in early 2025. That's one of the expectations out there, that we don't get the big numbers in January and February that we got last year. Probabilities, well, June, 55% for just one cut. That's the first time it gets over 50% is in June. And December, well, we really can't price in that second cut. It's just a 32% probability. Well, Kansas City Fed President Jeff Schmidt adds to that concern about a second cut, repeating comments he made last week. He believes we're at a point where the Fed doesn't need to be restrictive on the funds rate or supportive on the funds rate. Policy should be neutral, and it's just about where it ought to be right now, guys.